Stock Exchange Part 2. Listed securities. Securities, those are included in the trading list of the stock exchange. To get its securities listed, a company has to apply to the stock exchange and comply with its rules and regulations. A stock exchange is also called as a secondary market or stock market or share bazaar. Stock exchange meaning. Stock exchange is a specific place where various types of securities are purchased and sold. The term securities include equity shares, preference shares, debentures, government securities and bonds, etc., including units of mutual funds. Stock markets acts as intermediary between investors and borrowers. To provide safety and stability to the investors, stock exchanges in India are regulated by SEBI. London Stock Exchange, which was founded in 1571, is the oldest stock exchange in the world, while Bombay Stock Exchange, which was founded in 1875, is the oldest stock exchange in India. Definitions of stock exchange. According to the Securities Contracts Regulation Act 1956, the term stock exchange is defined as an association, organization, or body of individuals, whether incorporated or not, established for the purpose of assisting, regulating, and controlling of business in buying, selling, and dealing in securities. Husband and Dockery have defined stock exchange as stock exchanges are privately organized markets which are used to facilitate trading in securities. The important features of a stock exchange are as follows. First, market for securities. Stock exchange is a place where all types of corporate securities as well as securities of government and semi-government bodies are traded. Second-hand securities. Securities traded in stock exchange are those securities which are already issued by the companies. In other words, second-hand securities are bought and sold among investors in a stock exchange. Third, listed securities. Only securities that are listed with the stock exchange can be traded on a stock exchange. Listing of securities helps in protecting the interest of investors as companies have to strictly comply with the rules laid down by the stock exchange. Fourth, organized and regulated market. All listed companies have to comply with the guidelines of SEBI. Companies will also have to function as per the rules and regulation laid down by the stock exchange. Fifth, specific location. Stock exchange is a specific physical place where securities are traded. It is a marketplace where brokers and intermediaries meet to conduct dealings in securities. Today, all trading is done electronically on a stock exchange. Sixth, trading only through members. Securities in a stock exchange can be traded only by the members of the stock exchange on their own behalf or through authorized brokers. Management of stock exchange. Executive Committee of Stock Exchange looks after the overall securities and management of stock exchange. The composition, powers, and the name of Executive Committee differs from exchange to exchange. There are other supporting committees to assist the Executive Committee like Advisory Committee, Listing Committee, etc. Organization structure of stock exchange in India. In India, the stock exchange may be organized in one of the following three forms. First, voluntary non-profit making organization. Second, companies with liability limited by shares. Third, companies with liability limited by guarantee. The Securities Contract Regulations Act 1956 provides rules for their functioning, licensing, recognition, and for controlling speculation. Membership of stock exchange. The eligibility criteria for membership may differ from stock exchange to stock exchange. For additional information, refer website of respective stock exchange. Functions of stock exchange. First, mobilization of savings. Stock markets are organized and regulated market which protects the interest of the investors. This encourages small and big investors to invest in securities through the stock exchange. It thus provides a ready market for buying and selling securities. Second, capital formation. Investors in securities are attracted due to good returns on investments and capital appreciation. This attracts more investors to invest through the stock exchange. Corporates too can easily raise funds by offering various types of securities to meet the needs of different types of investors. The stock exchange serves as a tool for capital formation. Third, pricing of securities. The stock market helps to value the securities on the basis of demand and supply factors. The securities of profitable and growth-oriented companies are valued higher as there is more demand for such securities. The valuation of securities is useful for investors, governments, and creditors. The investors can know the market value of their investment. The creditors can estimate the credit worthiness of a company. Fourth, economic barometer. A stock exchange is a reliable barometer to measure the economic condition of a country. Every major change in country and economy is reflected in the prices of shares. The rise or fall in the share prices indicates the boom or recession cycle of the economy. Stock exchange is also known as a pulse of economy or economic mirror, as it reflects the economic conditions of a country.